Hey guys, welcome to my channel. So today I'm going to do a trade breakdown of an AUDJPY trade that I took on 16th of June 2025. I made 76 pips. So let's get started. So we'll first of all start by defining what this trading strategy is like. I'm going to lay down all the rules that we need to follow before we finally get a trade. So the first thing, of course, you need to find out the market structure on the higher time frame. So in this case, on your higher time frame, it can be weekly, daily, or 4 hour. Those are normally the best kind of higher time frame that I like to use whenever I'm looking for my trade setups. So if a market is bullish, of course, it's making higher high, higher low, higher high, higher low. And when you're making the higher low, that is just a retracement. And most of the time on your higher time frame, when the market is retracing, it's normally retracing to a PDRA or a key level. So now that is what you do for. That was what you do. So now, in this case here, this is a higher high, higher low, higher high. This is a bullish market. Then we look for a key level that is in line with the structure of the market. So our key levels, these are PDRAs. It can be fair value gap, order block, inversion, fair value gap, breaker blocks, mitigation blocks, any PDRA that you see on that time frame, you're going to mark it. Then we wait for price to tag our higher time frame key level. So once price has tagged our higher time frame key level, at this point here is now when we're now supposed to now look for our trade setup. So now there are some things that we look for. So the candle that tags the higher time frame key level, you need to wait for that candle to close. If your higher time frame was a daily order block and the next day price comes and tags that daily order block, you need to wait for that candlestick to close, or so also, which means that day you're not going to have a trade. Once the day ends and we closed and that candlestick closes, the next day now is when you're going to have a trade. If it's the 4 hour, the same thing. You have to wait for the 4 hour candle that tags your higher time frame key level to close. Then the next 4 hour candle that starts, that's the one that you're going to use to look for your trade. So then once price has tagged and closed, we now move to the lower time frame. And when you're dropping down to a lower time frame, we normally align these time frames. You just don't drop down from a higher time frame to any lower time frame. This is how I like to align them. If your key level was on the weekly time frame, you will need to drop down to the 4 hour. 4 hour is now your lower time frame. If your key level was on a daily time frame, once it's tagged, you're going to drop down to 1 hour. That is your lower time frame for the daily. If your key level is on the 4 hour, 15 minutes is your lower time frame. If your key level is in the 1 hour time frame, 5 minutes is your lower time frame. So once you drop down to these lower time frames, then we are going to look for our entry model. And for me, the entry model that I use is just the ICT 2022 entry model. So these are the rules. Number one, we are going to look for our trades during kill zone. And that is London kill zone or New York kill zone. Those are the sessions that I trade most of the time. Then we need to look for liquidity sweep. We need to look for market structure shift. So market structure shift is what you're going to use as confirmation that a reversal is happening. Because remember, you're looking for a trade when the higher time frame is retracing to a key level. So once price has tagged that key level, we are reversing off from that key level now to continue with the higher time frame structure. So yes, market structure shift is very important. Then you're also going to look for change in state of delivery. So change in state of delivery is not compulsory. Not every, you're not going to find in every pair anytime price tags a key level, change in state of delivery is formed. Also, there's SMT. Also, SMT is not compulsory, but it's good. It's just another added conference anytime you get it on the charts. Then, what are you going to use for your take profits? So, take profits, I normally use clear liquidity pools. So, liquidity pools, this can be previous session highs or previous session lows, previous days highs, previous days low, clear buy side and sell side swing highs and swing lows, So those are clear buy side and sell side liquidities. That is what I normally use as my take profit. I just don't target random places. So this is AUDJPY, the weekly time frame. So normally anytime a new week before a new week starts on Sunday, I normally do my analysis to determine my bias for the week and mark out my key levels. So in this case here we can see this weekly the market is made a higher high, we had a retracement, and so far this is what we have. So so here I need to mark my higher time frame key level. My key level at this point where price is at the moment, we have this order block here. And this order block has been tagged by this weekly candlestick, and we even closed. So this was last week. So because my key level has been tapped and this key level is in line with the structure which is bullish, and the candlestick that tagged the key level has already closed, that means the next coming week, which starts now on Monday, or the next candlestick that prints, because it's the weekly, so it's the next week, it means now I'm clear to move to the lower time frame and look for my confirmation that that price will respect this key level, and we will bounce off it and continue with the move up. So if you have weekly, the lower time frame for weekly is the 4 hour. So now let's move to the 4 hour, which is the lower time frame of the weekly, and see what price has done so far. So this vertical line here represents the start of the new week on Sunday. So here this is just the week ended, and here this is Friday, as you can see. So far when price tagged our higher time frame key level, you can see we got a liquidity sweep here. So I like to mark my liquidity sweeps as that. So that's a liquidity sweep. And then you can see this last bearish candle that caused this liquidity sweep, and also we took out this liquidity before price went above it. This is what we call change in state of delivery. This is how you can easily identify change in state of deliveries. So there we go. This is a confirmed change in state of delivery because this candlestick has closed above the body of this candle here, this bearish candlestick. So now that is number two. Another thing we look for is market structure shift. Has market structure shift happened at this point? No. At this point here, I would use this swing high here to identify market structure shift. But market structure shift has not happened because this candlestick just wicked. A confirmed market structure shift, we have to close, we need to see a candle body close above this swing high for us to confirm that a market structure shift has happened. So at this point here, we don't have our full confirmation to even think of looking for a trade setup in line with our bias. So let me just do chart replay and see what happens when the new week starts. So at this point here, this is where we get our market structure shift. And this was a Monday 1 a.m. candlestick. This is New York time. I'm using New York time. So at this point here, that is when we get a market structure shift, and we have confirmed that this market is bullish. So at this point here, you can even move to the 1 hour to use it as your higher time frame, or you can still use 4 hour as your higher time frame to look for a PDRA, any PDRA that price will create, either fair value gap, order blocks. You can use that for entry. So you can use 1 hour for entry. You can even decide to use 4 hour PDRAs for entry. But for me, when I get a 4 hour PDRA, I prefer to move down to now 15 minutes, because if your 4 hour is your higher time frame, 15 minutes is your lower time frame to now look for entry. So now on the 1 hour, what do we have? So let's see what price has done so far. We had this retracement here to this order block here, and then we got that, and then we made this higher high, and then so far what do we have? We have this order block here created by price. And what's the time? So this is 8 a.m. This candlestick is 8 a.m. So which means this is New York kill zone time. So at this point here, you're good to look for entry. So I marked this order block and also this fair value gap here, because this candlestick created a fair value gap. Then we can move to the next. We see, you can see. So the moment price tapped this fair value gap and order block, this is where I took my entry. So long position. My stop loss was below the swing low, and my take profit. You can see we have these buy side liquidities here. This and this is relative equal highs, and price likes to go where we have relative equal highs. So I had my TP there and my first TP on this high here. So this was my first TP. I made that is 61 pips. Then second TP